Hello traders, and welcome back to my channel. This is a continuation of my previous video, the introduction to candlesticks part 1. This here will be the part 2 of the video, and we will be discussing the engulfing candlestick pattern. Candlesticks are created by up and down movements in market price, and a lot of times these movements appear to be random. But sometimes candlesticks form patterns that repeat, and as a trader, you can use these patterns for your analysis, trade entries, stop loss placements, and profit targets. There are two types of patterns. Patterns are separated into bullish and bearish patterns. Bullish patterns indicate that the price is likely to rise up, while bearish patterns indicate that the price is likely to fall. These patterns don't work all the time. Candlestick patterns represent tendencies in price movement and don't guarantee that the price will move in the intended direction. That is why I highly suggest that you use a stop loss for all your trades to minimize risk and cut your losses short. The engulfing candlestick. The engulfing candle is one of the market's most visible price action signals. Many traders use this candlestick pattern to identify price reversals and continuations to support their trading strategies. The bullish engulfing. The image on the left shows a bullish engulfing pattern inside of a black square appearing at the bottom of a downtrend. The bullish engulfing pattern usually appears at the bottom of a downtrend or a pullback. The bullish engulfing indicates a push or rise in buying pressure and often triggers a reversal or trend continuation. How a bullish engulfing pattern is formed. A bullish engulfing pattern starts off with a bearish candle. The bearish candle is the short red candle. The second candle in the pattern will be bullish and engulf or swallow the previous bearish candle. The engulfing candle is the big green candle. In simple terms, the engulfing candle is always bigger than the previous candle. Characteristics of a bullish engulfing pattern. Bullish engulfings have a strong long green candle that engulfs or swallows the previous red candle. Usually this occurs at the bottom of a downtrend or a pullback. What does this tell us as traders? Bullish engulfings tell us that there's a trend reversal to the upside or a bullish reversal. This also tells us that selling pressure is losing momentum at a key level or support. What are the advantages of trading the bullish engulfing candle? The bullish engulfing candle is easy to identify and is usually a powerful entry signal where you can easily place your entry above the bullish engulfing candle and the stop loss below the candle. Now, let's cross over to the charts on MT5 to look for real-life examples of the bullish engulfing pattern. For this example, I will be using US 30 on the 5-minute time frame. Engulfing candles happen on all time frames, and the same methods can be used to execute them. Here's an example of a bullish engulfing candle at the bottom of this trend. This here can be your support area. Here is the engulf. Okay, let's fix that. And here is the engulfing candle. This long blue candle engulfed the previous bearish candle. How you would trade this is you would enter at the close of the bullish candle right here. This here would be your entry, and your stop loss would be placed below this wick. And as anticipated, you get upwards movement. It's not the best momentum shift, but you get it, you get the idea. Here's another example of a bullish candle engulfing the previous bearish candle. Your stop loss would be placed below this wick, and your entry would be at the close of the bullish candle. And as anticipated, price will move in a bullish manner and give you once more another bullish engulfing candle, which can easily be your second entry. Your stop loss will be placed below this wick, as this engulfing candle engulfs the previous bearish candle. The entry signal will be at the close of the bullish engulfing, right here. There are tons of examples of bullish engulfing candles. Here we have a pullback. As price moved up, it pulled back to this area and gave us another bullish engulfing. This blue candle engulfs the previous black candle, which is bearish. How you would enter this is you would put your stop loss below the candle right here, and your entry would be at the close of the candle. And we have momentum to the upside. There are tons of examples of how this can work. Here I'm only outlining a few. This will be our last example. Here's another example of a bullish engulfing candle. And as always, your stop loss will be below the wick, with your entry at the close of the bullish engulfing. Here is your bullish engulfing candle. This big candle engulfs the previous bearish candle. Your stop loss will be placed below the wick and your entry at the close of the candle. Now, we will be ending these examples here and crossing over to the bearish engulfing candle. How the bearish engulfing candle works, it's the exact opposite of the bullish candle. Instead of the candle going up, it goes low. An example of that would be this over here. Bearish engulfing candle would be this black candle over here that engulfs the previous bullish candle or blue candle. How you would trade this is you would have your entry at the close of the candle and your entry would be at the close of the candle, and your stop loss would be above these wicks, and you would be selling to the downside. we will look for more bearish candles. Here's another example of a bearish engulfing candle. This is our bearish engulfing candle. This black candle completely engulfs the previous bullish candle. And as always, how you will trade this is have your entry at the close of the candle. Oops. Okay, let's fix that. Your entry would be at the close of the candle right here, and your stop loss would be placed above the candle. This would be your stop loss and this would be your entry, and you would sell to the downside. Now we will be crossing over to a real life example and trade that I took using the very same method, so you can see the results forward tested instead of seeing them in hindsight. Now let's cross over to that video. Here is a live trade on Volatility 101S, where I will be trading the bearish engulfing candle. If you don't understand some of the concepts discussed in this video, please feel free to ask me questions in the comment section. Now, let's break down how I got into this trade. The price has been ascending, creating higher highs and lower lows until it got to a point where it created a resistance zone that it failed to break multiple times. A pin bar candle with a long wick rejected the resistance zone, followed by a bearish engulfing candle, which forms the evening star candlestick. At this point, I was ready to enter my sell position with 4 confirmations as confluence. 1. The pin bar rejection. 2. The bearish engulfing candle. 3. The evening star candlestick pattern. And finally, 4. The rising wedge pattern, which is also known as the ascending wedge. I haven't discussed some of these concepts with you yet, but I will discuss them in further videos. Now, let's see how the trade went after I entered my sell entry. And there you have it. Thank you for watching my video. Please post your questions in the comment section and I'll see you on the next video.